What's up, you guys? Welcome to Tech Monetize Official. Today, we're diving into 3 wild investments that could change your life, if you're lucky. These are high-risk, high-reward plays. Think lottery ticket, but with a strategy, not financial advice. You could lose it all, so be smart. Smash that subscribe button if you want more insane content like this. Ready? Let's jump into 3 gamble investments that could make you rich. First up, cryptocurrency, the Wild West of finance. It's a world where fortunes are made and lost in the blink of an eye, and the rules are still being written. If you've ever wondered what it feels like to ride a financial roller coaster, crypto is where you'll find out. The highs are dizzying, the lows can be devastating, and the pace is relentless. You've heard the stories. A meme coin turns a few bucks into a Lambo. Social media is full of overnight millionaires, people who took a wild chance and struck gold. It's the stuff of dreams, and it's what draws so many into the crypto space. But remember, for every viral success, there are countless untold stories of people who lost it all. It happens, but for every winner, thousands lose big. Crypto is insanely volatile. Prices can swing by double digits in a single day, and what looks like a sure thing can collapse without warning. Emotional investing is a recipe for disaster here. Fear and greed drive the market, and both can lead to costly mistakes. One tweet can send prices soaring or crashing in minutes. Influencers, celebrities, and even world leaders have the power to move billions with a single post. The market reacts instantly, and if you're not paying attention, you can get left behind or caught in the stampede. The potential for 100x or even 1000x returns is real, but so is the risk of losing everything. Most coins will fail. The vast majority of projects never deliver on their promises, and many tokens become worthless. Chasing the next big thing can be exciting, but it's also a gamble with long odds. Scams and rug pulls are everywhere. The lack of regulation means bad actors can operate freely, and new investors are often the easiest targets. If something sounds too good to be true, it probably is. Always be on the lookout for red flags. Do your own research. Read the white paper, check the team, and look for a real, active community. Don't just trust hype or flashy marketing. Dig into the details. Who's behind the project? What problem are they solving? Is there real utility or just empty promises? Bitcoin and Ethereum are the blue chips. Safer, but still risky. They've stood the test of time, but even they aren't immune to wild price swings. If you're new, these are a better starting point than chasing obscure tokens. Altcoins and meme coins, that's where the wildest gains and losses happen. These coins can explode in value overnight, but they can also crash just as fast. Many are driven by hype, trends, or internet jokes, not real-world value. Only invest what you're willing to lose. Seriously, imagine lighting that money on fire. If you can't stomach the thought of losing it all, don't put it in. Crypto is not a guaranteed path to riches. It's a high-stakes game. Diversify, even within crypto. Don't go all in on one coin. Spread your risk across different projects and sectors. That way, if one fails, you're not wiped out. Remember, even the most promising coins can go to zero. Have an exit plan. Decide when you'll sell before you buy. Set targets for profit and loss, and stick to them. Emotional decisions in the heat of the moment can cost you dearly. Protect your assets. Learn about wallets and security. If you lose your keys, your money's gone. Use hardware wallets for large amounts, enable 2-factor authentication, and never share your private keys. Security is your responsibility. Crypto can change your life, or wipe you out. Be smart, be skeptical, and never invest blindly. The line between success and failure is razor thin, and luck plays a bigger role than most admit. Learn from real sources, not just hype. The more you know, the better your odds. Follow reputable analysts, read up on blockchain technology, and stay updated on regulations. Education is your best defense. Remember, this is the ultimate high-risk, high-reward gamble. Treat it like a trip to the casino. Thrilling, unpredictable, and never a sure thing. Always be ready for your investment to go to zero. In crypto, nothing is guaranteed except uncertainty. If you're prepared for the worst, you'll be able to handle whatever comes your way. Next up, startup investing. This is one of the most exciting yet risky ways to try to grow your wealth. It's about backing the next big thing before the rest of the world catches on. But what does it really mean to invest in startups? And why do so many people dream about it? Imagine getting in on Uber or Airbnb before anyone knew their names. These companies started as small, scrappy teams with big ideas, and early investors who believed in them saw their investments multiply many times over. The stories of these unicorns inspire thousands to look for the next breakout success. The upside? Your small bet could turn into millions. Startup investing is one of the few places where a tiny stake can lead to life-changing returns, sometimes 100x or even 1000x your original investment. It's like holding a golden lottery ticket, but with a lot more strategy and research involved. The downside? Most startups fail, and you could lose everything. For every success story, there are dozens, sometimes hundreds of companies that never make it past the starting line. The odds are stacked against you, and it's important to go in with your eyes wide open. Thanks to new platforms, anyone can invest in early-stage companies now, not just the rich. Equity crowdfunding sites like WeFunder and StartEngine have opened the doors to regular people, letting you back startups with just a few $100s. This democratization of investing is changing the game. But the risk is huge. 9 out of 10 startups go under. That means most of your investments might not pay off at all. It's a tough reality, and it's why you should never invest money you can't afford to lose. Diversification is key. Spread your bets across many companies, not just one. By investing in a range of startups, you increase your chances that at least one will hit it big, even if most don't. Think of it as building your own mini portfolio of potential winners. Look for strong, experienced teams and founders who can adapt. The people behind the company matter just as much as the idea. Founders who have grit, vision, and the ability to pivot when things get tough are more likely to succeed in the long run. Target startups solving big problems in huge markets. The bigger the market, the greater the potential for growth. Companies that address real pain points and have room to scale are the ones that can deliver outsized returns. Check for real traction, customers, revenue, or partnerships. A great idea is just the beginning. You want to see evidence that the company is gaining momentum and that people actually want what they're offering. Understand the deal? What's the company worth, and what are you actually getting? Read the fine print, know your rights as an investor, and make sure you're comfortable with the valuation and terms before you commit. This is a long-term game. Your money could be locked up for years, sometimes a decade or more, before you see any returns, if you see them at all. Patience is absolutely essential. Don't expect quick wins, be patient and realistic. Startup investing isn't about getting rich overnight. It's about playing the long game, staying informed, and being ready for ups and downs along the way. The potential for life-changing returns is real, but so is the risk of total loss. You need to be comfortable with both possibilities and never let excitement cloud your judgment. Do your homework, diversify, and only invest what you can afford to lose. Research every opportunity, ask tough questions, and make sure your overall financial health isn't at risk. Startup investing is a high-stakes bet on the future. It's thrilling, unpredictable, and not for the faint of heart. But for those willing to take the risk, the rewards, both financial and personal, can be extraordinary. If you're in, buckle up for a wild ride. The journey will test your patience, your research skills, and your nerves. But if you're prepared, startup investing can be one of the most fascinating adventures in the world of finance. Last, let's talk penny stocks, the stock market's wildest corner. If you've ever seen movies about Wall Street, you know the kind of chaos and excitement that can come with trading. But penny stocks take that to a whole new level. These are the stocks that live on the edge, where fortunes can be made or lost in the blink of an eye. Penny stocks are super cheap shares, usually trading for less than $5 each, and often found on less regulated markets like the OTC Bulletin Board or Pink Sheets. Because they're so cheap, they attract a lot of attention from people hoping to strike it rich with a small investment. The dream is simple: buy low, sell high, and walk away with a huge profit. It sounds like the ultimate shortcut to wealth. Imagine turning a few $100s into thousands overnight. That's the fantasy that draws so many people in. But here's the harsh reality. Most people who play this game end up losing money. The odds are stacked against you, and the risks are much higher than with regular stocks. Penny stocks are risky for a few big reasons. First, there's very little reliable information available about these companies. Many don't have to file regular reports with the SEC, so it's hard to know what's really going on behind the scenes. Scams and fraud are everywhere, with shady operators looking to take advantage of unsuspecting investors. Another huge problem is illiquidity. That means there aren't many buyers and sellers, so you might not be able to sell your shares when you want to. Prices can swing wildly, and you could get stuck holding a stock that's plummeting in value. Manipulation is rampant in the penny stock world. Watch out for pump and dump schemes where insiders or promoters hype up a stock with false promises, drive up the price, and then dump their shares, leaving regular investors with big losses. If you're thinking about trying your luck with penny stocks, treat it as pure gambling, not investing. The odds are similar to playing roulette at a casino. Fun for some, but not a way to build real wealth. Only use money you're totally okay losing. Never invest your rent, your savings, or anything you can't afford to see disappear. Think of it as entertainment, not a financial plan. If you do decide to dive in, do your homework. Look for companies with real products, actual customers, and up-to-date SEC filings. Dig deep. Don't just trust what you read on message boards or in flashy emails. Be extremely skeptical of hype, rumors, and unsolicited tips. If someone is pushing a can't-miss stock, ask yourself why they're telling you instead of buying it themselves. Remember, if it sounds too good to be true, it almost always is. There are no shortcuts to easy money in the stock market, especially not with penny stocks. Have a strict plan for when to sell, both your winners and your losers. Decide in advance how much you're willing to risk and stick to your plan no matter what. Consider selling half your position if a stock doubles, and always set a stop loss to protect yourself from sudden drops. Discipline is your best defense in this high-risk world. Yes, penny stocks can deliver explosive gains, and every so often, someone does hit the jackpot. But for every winner, there are dozens of losers who never make headlines. For most people, the best move is to avoid penny stocks entirely. The risks are just too high, and the odds of success are slim. But if you're feeling lucky and want to roll the dice, make sure you go in with your eyes wide open. Know the risks, set your limits, and don't let greed cloud your judgment. This is the riskiest gamble of all in the stock market. It's not for the faint of heart, and it's definitely not for your life savings. So if you decide to play with penny stocks, don't say you weren't warned. The stakes are high and the dangers are real. Proceed with extreme caution. That's a wrap on 3 of the riskiest, most exciting ways to gamble on your financial future. Crypto, startups, penny stocks, huge upside but massive risk. This isn't financial advice, just a look at the wildest bets out there. Be smart, be cautious, and never risk more than you can afford to lose. If you enjoyed this, hit subscribe and ring the bell for more. Drop a comment with your craziest investment story or which gamble you'd try. Thanks for watching, stay safe, and see you in the next video.